like you're hoping for a big print for your Bitcoin to go up. No, I own Bitcoin because I'm worried about it, because I've lived through all these events. When I was in high school, it was 1987 Black Monday crash. I don't know what it's going to be. I do not think that we have a total collapse of confidence in fiat, but I do believe that we have enough money printed that you better own some gold and Bitcoin. And my preference is Bitcoin. Ray Dalio's preference is gold, but he likes both also. But you better own some, because like Lynn Alden likes to say, nothing stops this train.
He doesn't own Bitcoin to bet on it rising. He owns it because he's worried. These repeated crises demonstrate our systemic fragility and explain why sovereign balance sheets and debt dynamics matter deeply today. Lavish echoes themes similar to Lynn Alden. Deficits and liquidity now govern markets more than interest rates. We're in a regime where fiscal dominance prevails, meaning rising debt and continual liquidity injections fuel asset inflation, not credit contraction.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Younger people who haven't had the experience of living through all these things would say, you're just, you're projecting, like you're hoping for a big print for your Bitcoin to go up. No, I own Bitcoin because I'm worried about it, because I've lived through all these events. When I was in high school, it was 1987 Black Monday crash. Just, flash forward just a little bit, and you've got all these events that happen that are 100-year events. You've got the long-term capital management crisis of 1998 that caused a massive central banking, scrambling in New York to save Goldman Sachs and other banks from that meltdown that could have taken the entire financial industry down. Just flash forward just a couple of years, and you've got the great tech bubble pop of 2000, 2001. Then flash forward, you've got 2001 9/11 event. Then flash forward to the 2008 housing crisis. Then flash forward to that small repo crisis, but that was right before the major 2020 market meltdown from COVID lockdowns and, a supposed pandemic. So that all those events are 100-year events, and they seem to happen every 5 to 7 years at best, if not more. So I don't know what it's going to be. I do not think that we have a total collapse of confidence in fiat, but I do believe that we have enough money printed that you better own some gold and Bitcoin. And my preference is Bitcoin. Ray Dalio's preference is gold, but he likes both also. But you better own some, because like Lynn Alden likes to say, nothing stops this train. We need more liquidity, and it's going to come fast and hard. And if we have a market meltdown, it will be a V recovery, because they cannot have a meltdown that causes an explosion in the deficit and even more need of treasuries coming to market, because they're already over $2 trillion of deficit. They can't have 3, 4, 5. It would be devastating. But I do ultimately think, Michael, what happens for a long time is that Bitcoin becomes the ultimate store of value, and whether it's the U.S. Treasury is tied to it somehow or not, and then the U.S. dollar just remains the global reserve currency. And so that to me is that's a logical progression, and that could last for decades or maybe even hundreds of years. We don't know, but that to me is a logical progression first. And then we'll see what happens to get to the Bitcoin standard. But I would rather have it orderly. I don't want to see a dystopian state of massive difference in wealth. You don't want to have a few Bitcoiners at the top here with all the money and all the control. That wouldn't be healthy to me. We want to be able to have everybody okay and not be oppressed by this system anymore. And that's what we hope. I think that Bitcoiners, especially the maxis, hate seeing the institutions coming into the space. And I think it's fundamentally necessary for institutions to be on board with and using and promoting Bitcoin in order for us to get to where we ultimately want to be as the ultimate store of value in the markets. I think it's just obviously necessary, and as the institutions continue to come to this space, I think it's good for Bitcoin. They can't co-opt the network, and that's the most important thing. And so, and the BlackRock buying, tens of billions of dollars of Bitcoin is not a concentration. They're buying it for their clients, and those clients are regular people, and they're buying it in their 401ks and IRAs, and that's good. So I think ultimately it's a good thing. Larry tends to think that we're going to have just an unraveling of the financial system, in that Bitcoin, we'll get to a Bitcoin standard, we'll have the big print, because you just have so much money that's going to be dumped onto the market because of a loss in confidence in basically in all fiat currencies. I tend to think that the confidence in fiat currencies is hard to shake. Even in countries where you have high inflation, people still use those currencies because everybody considers them fungible. You can use them instead of bartering. You can use currency, even if it's inflation, or even if it's being debased. The U.S. dollar is easily, by far, not even close, the strongest out of all of them. And so what I think is that, we're going to have some sort of black swan event. I don't know what it's going to be. I don't know if it's going to be war, if it's going to be some sort of pandemic style, lockdown, or whatever it may be that they try to do. I do think that, or it could just be something we don't expect that happens in the market that could cause a quasi-market meltdown. Something happens in the treasury market, something happens in the credit markets, a la, the great financial crisis and the housing crisis. I don't think it's going to be housing. I don't think it's going to be commercial real estate, but there could be something that is tangentially tied to those somehow because of credit. And the reason I say that is because we are so indebted, and the whole world is so levered to debt and borrowing, that it wouldn't be a stretch to see something melt down that causes a major disruption in the markets.
Lavish envisions a long-term progression. Fiat currencies remain dominant for global transactions, but Bitcoin emerges as the ultimate store of value, threading into monetary structures if not formally adopted by governments. He prefers an orderly transition, not a chaotic collapse that leaves Bitcoin exposure only to an elite few. Institutions, rational adoption, broad access all make for a healthier long-term outcome.
M2 is expanding primarily because of operations out of China. They're expanding their money supply, but that's global M2. I actually do you know Michael Howell? He's got a fantastic newsletter, and he to me is a leading. He's got the leading knowledge base on liquidity, and so it's not just a money supply. He looks at the expansion of global liquidity, okay. And it includes different measures, and this is why it's so important. It's not just the money that's being created; it's the debt that's being created and the amount of leverage that's in the system, and so that's liquidity. And so what he looks at the money. Then he looks at things like, all of the debt, and he looks at things like the volatility of bonds. Why would he look at volatility of bonds? And this is all proprietary, what he does. I don't know what his calculation is, but it's fantastic. But what he does is he looks at how you can borrow against assets. And so if you have volatility in debt, and specifically in treasuries are the largest asset class to borrow against, U.S. treasuries. If you have high volatility there, that means that the lenders are going to require higher margin. That means that there's going to be less liquidity because you can borrow less against it to expand the money supply more, right? It makes sense. So he looks at things like that, and his the way he's been looking at it, he thinks that we're going to continue. We have contractions and then expansion, contraction. He thinks, but it's still going up. We're going to expand into the end of this year, early next year, in liquidity is what he's projecting. And that means that, and he plots Bitcoin against this measure of liquidity, and he looks at it and says, hey, Bitcoin tends to lag somewhere around 10 to 12 weeks behind the money supply. So if you see the money supply expanding over 10 or 12 weeks, Bitcoin's going to catch up to it. And the only way that won't work is if money supply contracts and then it meets Bitcoin somewhere else. But the reality is Bitcoin tracks the money supply, the liquidity supply, global liquidity, very well. And so that's the measure that I like to look at personally, because it includes more than just money. It includes the actual liquidity that's driving the purchase of these assets, whether they're risk assets like the S&P or they're hard monies like gold and Bitcoin. And he groups gold and Bitcoin together in a different section in his newsletters. But his company's called CrossBorder Capital.
Okay,
it's very good. And if you just
I just looked him up here.
Pull something up here, and I can show you one of his charts, and that might be helpful.
Let's
might
see
be
it.
helpful for your listeners to understand what I'm talking about here. So if you just give me a second, I'll find one of his charts here.
Yeah.
And this
is he a Bitcoiner, or is that just something he tracks?
I think he's a believer in Bitcoin. Bitcoin, yeah. So here's Michael Howell global liquidity update from yesterday. So this is literally yesterday now. So if we pull this up, I'm going to share this, and then your readers can see this. I mean, I don't get any benefit from this. I just like Michael a lot, and I really enjoy his outlook and how he sees things. So you can see this here, right?
Mm-hmm.
The global liquidity. Is it showing right on your screen? It is. Okay, great. So you can see that this global liquidity is that it's been expanding. It continues to expand, and that's not just money. You can see it here, and it has to do with the U.S. dollar weakening. Means it's cheaper to buy assets here, so that expands liquidity. You've got treasuries and collateral values are going up, so that's good. So you've got a fall in bond market volatility. That means that you need less collateral for more borrowing, because the volatility means that the lenders will allow you to borrow more because it's not as risky because there's lower volatility. Fed stuff has been flat. But this is kind of the way he looks at it. And then if you go down here to the bottom, you can see that here's Bitcoin and global liquidity. And so here's the chart right here. You can see that Bitcoin it tracks it very well. It got ahead of itself here, and then it came back, and now it's been tracking it really closely ever since. Now we know that this number is going up, and that we expect that Bitcoin is going to follow it. And so that's because this is a current number, and it's actually this is lagged, right? So it's actually been it's expanded since then. So that's kind of the way that's how I look at it, and that's why I think I agree with you. It's very important to look at liquidity. People typically use M2, but I think that's the largest aspect of liquidity. Clearly, that's the largest piece of what he looks at, by far. But there's other factors in there, and so I think it's a closer approximation to what's really going on in liquidity, as opposed to just the money supply.
Lavish cites liquidity strategist Michael Howell to emphasize that while inflationary tailwinds persist, credit volatility or treasury market stress could temporarily disrupt liquidity late this year or early next. Howell's work shows that if liquidity contracts, Bitcoin could underperform for a period, though historically liquidity rebounds eventually and BTC resumes its upward trend.